Welcome to Wealth Creation. Joining us, as always, is Shafik Hirani. He's the Division Director at Investors Group Financial Services, Inc., and he's the #1 financial advisor at Investors Group in Alberta, according to New Business Credits. Shafik, as always, pleasure to have you.
Thanks again for having me.
So Shafik, right now, with the way the markets are, when is the right time for people to get into it, to invest?
Right, and that's a common question. You know, what do I do now? Yeah, and I'm going to run through a couple of stats that a lot of people don't really understand. And so we first have to figure out when, and then we have to understand what. And so let's run really quickly at the slate, and then I'll sort of finish it up by what I would do. So if you take a look at the slate right now, so Chad, this slide is a little bit busy, as you can probably see, but what it does tell us is that there are different sectors. You know, there's global small caps, foreign equities, global bonds, Canadian large cap, Canadian bonds, and so on. Okay, so if we were to take a look at the last 20 years, we wouldn't know which one. It's a very diverse group, and everybody's looking for advisors to pick the next winner. So if I was in 87, I picked global small cap, we can see that I would have had probably been wrong, and I would have been all over the place, basically. And so it's really difficult to see, geez, I'm going all over the place, but that shows you your chart of
the puzzle on it.
That's right, that shows you the puzzle. So instead of looking at where do I invest, let's just create a whole basket, because we know if we look at a whole basket, our average return will be higher than trying to pick the next. That's right. So that's the first question, is where do I invest it? Yeah. So the second question you asked is when. And so if we look at when, let's take a look at 5 different investment approaches. This was put on by Charles Schwab. He took a look at the company took a look at 5 different investments. They took at A. The investor A had a crystal ball, and this person knew exactly, and they bought $2,000 a month at the lowest monthly close of the year. The investor B bought at the very start of the year. This person took action right at the beginning of the year. They took action. Investor C bought the same amount, but what they did is a dollar cost average. They bought the same amount every single month throughout the next $2,000. And this person, Norman No Luck, bought at the highest close of every single year. And then Doris Do Nothing really did nothing. All she did is bought GICs because she didn't want to be in the markets. The question is, who did the best? Well, the person that bought the perfect timer ended up with $135,000 in the S&P, $2,000 over 20 years.
Okay.
The person that invested yearly ended up with $132,000. That ain't much different. The person that had the dollar cost average or bought monthly ended up with $126,000. The person with the worst no luck timing ended up with $117,000. Again, it is a little bit worse, but it's not that much different. The person that bought nothing, just treasury bills, ended up with $61,000.
So do nothing, gain nothing.
That's exactly it. So what we can do, Chad, is we can draw some conclusions. The first thing is, when we look at when to invest, we understand that it's not really timing the market that makes any kind of impact on our future. It's time in the market that makes the impact. And where to invest, we just have to understand that we can't really be the next Warren Buffett. We can't be the next Oracle. So then we need to diversify, and we need to create many pools, and we need to look at managed pools of assets.
Keep it realistic.
Yes, be realistic.
Shafik, thanks again. Always interesting.
Okay, Chad.
For more information on Shafik Hirani and the Wealth Creation segments, log on to energytv.com.